Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Tuesday, November 7th, 2006. And on Wall Street today, we're looking at the stock Garmin, symbol GRMN. And Garmin's been in a fantastic uptrend as this GPS technology has really taken off over the last few years. And looking at just this monthly time frame, we see this terrific pattern of higher highs and higher lows. Now, just recently, it's run into a little bit of trouble, however. And looking at that daily time frame, you can see that we just had some big trouble actually with this gap down. And when stocks gap down on big volume like that, it really makes me suspicious of them going forward. To me, it says this is big money getting out of this stock. It traded, over 25 million shares, it looks like that day, and it's come up on diminishing volume to this 50-day moving average. Now, it looks like it's been saved temporarily by this uh, advancing 200-day moving average. But to me, it looks like Garmin is in a bigger distribution pattern, potentially tracing out this double top. And the way a double top works isn't, you can't just say, hey, it hit that price twice, so it's a double top. Otherwise, this would have been a double top. I mean, this would have been a double top here 2 weeks later, etc. In order for a double top to really play out, what you need is you need a stock in an uptrend. It finds resistance in an area where it had near where it had previously. It can make a slightly higher high or lower high, and then it breaks the trend line. When it breaks the trend line, that's a good sign that a reversal may be coming. Where the double top can really be considered complete is when it breaks below the low. So here we have first this high, we have the pullback, another high, and then if it breaks below this low right here, which is about $41 a share, then we can say the double top was complete. What we would do is then come up with a target based on the height of that pattern. The height of this pattern is 55 minus 41, it's 14 points, and if we take 14 points away from 41, we get a price target of $27 a share. So I would be on the defensive if I was in Garmin. It looks like it's had a fantastic run. There's certainly some profits to be taken, and I would really be on the defensive here now with that gap lower. It tells me that there's big institutions that are saying, you know what, I've ridden this up. There's something they didn't like in that last earnings report. Time to move to the sidelines. It's probably going to take a while for this pattern to really continue to develop, but for now, it doesn't look like there's any edge getting involved. Don't be a buyer of this weakness. It typically does not pan out.